Hey guys, Dave with Moneyology here. Hope everyone is having a great weekend. Today is November 24th, 2019, and these are the charts around the world weekend review edition. We'll take a look at about 20 charts, both in with the most momentum as well as those at the bottom of the momentum poll, as well as some charts that are representative of the overall equity market. So let's take a look. For those of you new to these videos, these are all going to be done from a weekly perspective. That's to remove a lot of the short-term noise in the markets and see what's taking place from a bigger perspective. And what we want to do is in this public video is go through these various charts, and then throughout the week for the premium subscribers, we'll go through many of these underlying sectors and try to identify some of the best opportunities to trade and invest on. So starting here with the S&P 500, the SPX. And you see here that we've kind of hit the top of this trend line here. So for the time being, I would not be surprised to see a pullback, perhaps as low as 30.27 would be healthy. Now, I'm not quite sure it's going to happen this week. It's a very low volume trading week, but I think we might, kind of nibble around here and then eventually pull back to these levels. But ultimately, I think that we are in a very firm bull market. Pullback towards that 61 level is kind of what I'm looking at in terms of momentum. So pullback is possible, increasingly likely. I see some negative divergences on the daily, hourly timeframes, but overall, I think the longer term perspective, you see the 13 and 26 moving averages curling higher, and they will come in as support. And I think the markets are well positioned for longer term growth over the next 3 to 6 months. Volatility index. So you see here, volatility is this 12 barrier has been serving as support over the last couple of many months, since all the way back to 2018. Now I've gone on the record and am saying that I think that eventually this goes something like this, and it'll break lower and ultimately head down towards that $9 level. You see that the 13-week is below the 26-week moving average. That's when that's happened. It's typically net negative for the overall markets. Also, here you've got this descending downtrend here, and perhaps we might test it here, but I don't think we're going to break it. And if that's what happens, then I think we move lower on the VIX and higher in the overall markets. Gold. So gold, if you look at the longer term perspective, gold is in a very, very bullish uptrend right now. This uptrend, frankly, started all the way back in 2001, and then we consolidated for a while from 2011 to 2016, broke out in 2016, and then consolidated again. And now back in June, this breakout confirmed the back test was successful, the 2-year back test, and finally broke out. Here we are now at 1537. We pulled back some. Now we close the week at 1463. And while it's still theoretically possible that we go all the way down towards that 1430 level, I think we're very, very close to a bottom in gold from the short-term pullback, and ultimately I think we resume much higher. Here's the U.S. dollar, which is not always inversely correlated to gold, but certainly is a tailwind for gold if the dollar breaks lower. So the dollar right now is pushing up against upper trend line support, both in terms of RSI as well as price channel. So I'm watching this closely. You've got the 13 and 26 week moving averages serving as support. Is this just a fake out, or is this a breakout? We'll find out. And this will be a very important sign for overall commodities. My hunch is that we go lower, but who cares about hunches? I want to see what the charts tell us. Crude oil, and those of you watching the videos have seen my perspectives on crude. I think this is the one sector we've been more or less most accurate on over the last couple of years. You see the two moving averages, the 13 and 26, and they've been pretty spot on. When the 13 broke below the 26, we really broke down hard, from a high of about 68 all the way to a low 45. Once they crossed here, sometimes there are fake signals. So this was a fake signal between here, but I think this particular signal is going to change things. And I think that this is kind of a rounded bottom, if you will. And if this breaks that 58-59 level over the coming weeks, I think we're going to see a major run up in the sector, and on many of the underlying names will do exceptionally well. Notice this downtrend line since all the way back since 2018 looks to be on the verge of breaking to the upside. So I like the sector. It's probably one of my top 2 to 3 favorite sectors, and I'm definitely looking at accumulating positions here. Emerging markets, has broken out from this symmetrical triangle back in September. Now it's kind of back testing, pulled back this week, only about 60 basis points lower. Might even pull back all the way towards that uh, to back test this level at 41 at some point in the market pullback. But I would use any opportunities to add to this position because emerging markets look like they want to rock and roll over the next 12 months. Here's a 10-year U.S. Treasury. And this is another area that we've been pretty spot on over the last couple of months. Probably over the last year or two, frankly. But you see that 10-year Treasuries, even though we pulled back at the 50 RSI, I think that we might just consolidate here. And my hunch is that we're moving all the way back towards that 260 area before ultimately pulling back to new lows. So this is basically the overall summary of the markets. Equities might be pulling back in the near term, hit some resistance points and are showing some divergences. But overall, use opportunities of weakness to add and accumulate. So let's take a look at some of the sectors who have really performed well. So first and foremost, palladium pulled back towards that 61 level, found support, and looks like it wants to move higher again. So this breaks the 172 area. Palladium's going to new highs. So, this is a good risk reward entry at this point with a stop loss below 150. I think this is going higher. Semiconductors, as SMH ETF, so had a bit of a shooting star right here at 135. And notice that even though momentum did break above the 69 level, it wasn't that much higher than when we were at 123 and then when we were at 120. So negative divergence here suggests that a pullback, multi-week consolidation is possible. Move back towards 122.50 level would be pretty nice to see, and then you can add or initiate a position there. Healthcare providers, another sector that's been incredibly hot of late. It's been up 1, 2, 3, 4, 5, 6, 7, 8, 9 straight weeks in a row. That's awesome for anyone who's been riding this trend. But look what's happening here. The last time we really fell was around this level here when we broke below this level of RSI. And that's where we're approaching right now. So that's going to serve as very strong resistance. I don't think we're going to break it right away. So I think a pullback here for a couple of weeks, perhaps a bullish flag all the way down to that 180 level before an ultimate breakout to the upside. So use any opportunities of weakness to add to your positions. Turkey. So Turkey is one of those countries that people have been very, very down on. Obviously, a lot of political risk, but this doesn't look to me like a ETF that looks like it's going to be breaking down anytime soon. This, in fact, looks like it wants to break out. So watching this closely, a break above 29 and send shares all the way towards that 44 level. And this is a pretty big component of the emerging market ETF. So this can play a big role in that EM ETF. Taiwan has done exceptionally well over the last couple of months, and after breaking above that neckline around 37, really took off. 1, 2, 3, 4, 5, basically 5 of 7, 6 of 7 weeks being up. Now we're in extremely overbought territory, but again, those are where some of the best gains are. So if this can stay above that 39 level, I think she's going much higher over the next 3 to 6 months. Technology, XLK, is similar to the semiconductors kind of shooting star pulled back towards that 83 level. It would not at all surprise me. But ultimately, this is a very, very beautiful uptrend. I don't see this reversing anytime soon. Biotech. Biotech is another area that I'm going to be watching very closely. We're going to have some videos throughout the week of the biotech sector. Beautiful descending bullish triangle breakout. 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks in a row. The biotech has done well. So yes, while it's reasonable to assume that this is going to head all the way towards that 123 level, a pullback would not at all surprise me. But we closed at the highs of last week, so anything is possible. Silver, another area that's been really, really good, although it's been just meandering, consolidating a bit had a bit of a shooting star here last week. So perhaps a little bit more of a pullback is required, perhaps a low towards that 28 level, which is that 26 EMA. And then ultimately, I think this bullish descending triangle breaks to the upside. And this is going to go from 29 to about 52. Here are the home builders, I believe, home construction. And once we broke out of this bearish wedge to the upside, that was a very bullish development. And home builders just basically took off. Now they're consolidating at that 100% Fibonacci retracement, all the way at that 46 level. And if that breaks to the upside, I don't think it's going to happen yet. I think we still might have a pullback or two. But once that breaks to the upside, you're going to see a beautiful next leg higher. Gold miners, you see, this is a bullish flag, a bullish wedge forming here, right as we're at that 50 RSI level. So long as that holds, I think ultimately this breaks out to the upside. You see, gold's been really consolidating a lot of these gains as the MACDs have been in firmly bearish territory, but I think that's going to change sooner rather than later. Okay, so some of the lower end names, and we've been covering them over the both in premium and public videos. It's energy. Energy seems to be on the bottom right now, but I think that that's going to flip. I think you're going to sit back and in 3 months we'll look at these charts, and I bet you a lot of these energy sectors will be at the top of the momentum pole. But right now they're not. So first and foremost, there's a consistent theme amongst these is that there's significant positive divergences, even if we're at lows. So I think at some point that this is going to break to the upside. Can't say when that's going to be, but again, that 8 area is one that I'm looking at very closely. For First Trust Natural Gas, another one that's creating positive momentum here uh, as it's kind of rubbing against that upper trend line, even as it's creating new lows. So again, another area of positive divergence. It's going to resolve itself to the upside. The only question is when. Oil and gas, same thing, kind of consolidating, building an uptrend here in momentum. And if this can break $8, then I think this is going to make a strong run into the future. Oil, gas, and exploration, same thing, renewed uptrend. Now, in this case, it's already broken the downtrend. Now, perhaps it's back testing. So, if this back test is successful, this might be a great ETF to own, or perhaps some of the underlying. Right, coal and as another commodity, kind of making triple bottom lows, but momentum is not confirming the bottom. So I think we might be close to an energy renaissance, and coal will very much participate in its upside. India, small caps. So a couple of countries here. 3 consecutive higher highs in momentum is a very positive sign. I think I need to see this break above 36 before I'm interested. But India trades in cyclicality. You see this going up all the way up and then all the way down and all the way down. And now I think we're setting up for a period of all the way up. Oil services, similar type of backtest as 8XOP. ETF is very positive above that 38 level. If that can break above 13, then this is game on for this sector. MLPs. So this MLP is interesting because it's very much tied to oil and energy. But even as oil and energy have been bouncing, MLPs have been getting creamed over the last many months. But this could be a good bottoming area around 18 to nibble on some shares that are going to pay you a very nice feedback while you wait for the recovery. And finally, the URA ETF, uranium. So that broke out above its downtrend here back in early November. Is this a back test or is this a fake breakout? We'll have to find out. But ultimately, this is coiling. There's not much room to go. So I'm expecting a very big move, either to the upside or to the downside. And frankly, most of the downside, if not all of it, has already been priced in. So hunches, it's going to go this direction, but ultimately let Mr. Market decide. That's it, guys. Have a great week and stay tuned for our videos for the premium subscribers throughout the week. Always appreciate your feedback, and I look forward to hearing from you soon. Take care.